You had old crop up a dime when new crop was only up 3.
Welcome back to the Comstock channel. I'm Marlin Bohling with you. Always a pleasure to have you with us as we talk about ag-related topics and market activity. Well, here we are on a Friday, and joining me to talk about Friday's close to the trading week, we have Eric Relph with us. He's one of our analysts here at Comstock Investments. And we're going to analyze what took place here on Friday's trade. Of course, obviously, Eric is on the road today. Eric, give us an idea of where you are.
I'm actually at Lake of the Ozarks in Osage Beach, Missouri. We have the Missouri Cattlemen's annual convention meeting and trade show this week, starting today and then all day tomorrow. So kind of interesting to be able to talk to folks and get a pulse on what's going on in the cattle industry, especially here where you have more cow calvers than anywhere in the country. And, we were kind of joking on the way down here. Myself, I'm from Western Kansas. Zach Hooker, one of our other brokers, he's from Eastern Colorado. So it's kind of a similar situation where you need about 40 acres per cow. And here they can do about 40 cows per acre. It's quite a difference when you're talking about how this operation works from different regions of the country.
So, considering where you are in cattle country right now, let's talk about the cattle markets first. We had the live cattle trade kind of mixed on the day. We had the feeder cattle trade. Well, it looks like the front months were maybe up a little bit. Not a runaway train or anything, but this entire cattle complex is really trading up there in rarefied air right now.
Yeah, and have been. This has been a few week move that is really substantial. The interesting thing today was we started off actually on a weaker note. We gapped open lower in several contracts and traded to dollars lower in the feeder cattle, about $1 lower in the fed cattle. But then we're able to rebound and finish near the highs of the days at around unchanged across the cattle complex. There were some contracts, especially in the fat cattle, that hit about $1 higher. But until we see that April live cattle board take out $2, it's just hard to get too bullish from these levels. Like you said, rare air. And I think you're going to continue to uncover hedging and starting to hear stories about Packers walking back bids. Numbers today and yesterday much lower than what we saw the first reported sales of the week on Tuesday and Wednesday. So kind of a mixed bag, I guess, of emotions right now in the market. The sentiment is a little bit skewed to the downside versus the first half of the week just because of what we've seen take place here in the last couple of days.
So are you waiting on a reversal between the cash cattle trade and what the futures are doing to be convinced that a top might be in?
I think so. I think something like that is generally what I'm looking for. And you had the April board traded to 199.70 twice, double top there. I actually had orders at 199.80 that I've missed twice by a dime. But that's the way it goes sometimes. But so at the same time, you got Southern Plains trading $2, 201, depending on where you're at and which day of the week we're talking about. So you're right there-ish. But still, until we see that, like you said, you should start to see that cash slough off where the board's maybe holding a little premium. That would be a firm indicator in my mind.
Well, now talking about the cattle market being on firmer ground, when we look at the lean hogs, boy, they really struggled. Those deferred months were over $2 lower today.
Well, in the summer months, if you go look at that, you traded that June, July, August to 10. Well, in the case of June and July, over 104. August wasn't quite keeping pace at 103. I mean, this was a board that was really enthusiastic, but you've got a 104 summer board and you're paying $100 for ISOines. I mean, this is a tough market to try to pencil, especially if you're going to have any death loss. And that's something we talked about in our Wednesday meeting a little bit, and so it's hard for me as a risk management specialist to try to get people to pull the trigger on protecting the price levels, especially if they can't really figure out how they're going to pencil a profit, even though they're at historically high levels. It's just tough to reconcile the mindset when you've got such euphoria on the front end of the market and maybe you're lagging a little bit on the back end. But luckily, we did get at least some LRP done on some swine this week and felt pretty good about that, locking up some 104 plus numbers out there in the summer. And at least they're going to protect their operation that way.
Well, you were talking about potential death loss. What about in the plains? In cattle country, I know they're talking about just frigid cold temperatures with extreme cold wind chills this weekend.
Yeah, I think there's definitely some cattle producers worried about it, especially when you get into the southern Ozarks down in Arkansas and Louisiana. There's still a lot of cattle in those regions and even deep in the southeast, but they're not supposed to be as cold, so not as much threat there. But definitely being talked about. I was talking to one guy earlier today. He said, he's a little worried about how these light calves are going to react to multiple days below zero because that's what they're facing in southern Missouri this coming week. And so there is concern about that. And when that storm moved through northern Colorado, we were talking to a large feeder. I won't mention names, but a large feeder in northern Colorado, and they said that, shot us a text early in the morning and said we're up to 50 dead so far today. Now, when those storms move through, and they would typically see 6 or 8 would maybe die in a storm like that. But for 50 to die, that goes to show you that we've just not had the exposure that we normally would, and we haven't moved into that season like we normally would. It's just when you flip a switch and change it like they have, that's when it really causes a problem. In the case of the hogs, it's PRRS cases, it's widespread, and the cold doesn't do anything um, to mitigate that when you're talking about hogs that are in barns. And so it's the confinement that kind of creates the problem there, and we're starting to see that pretty rampantly.
Well, when you talk about that ultra cold weather dropping down out of Canada into the central plains, it could have an impact not just on livestock, but I'm kind of concerned about the winter wheat. I know you had told me in the past, Eric, that some of that wheat in the southern Kansas area and maybe into Oklahoma had so much growth to it. It was so tall, like maybe a foot tall or so, that maybe it is at risk of cold weather damage like that. What do you think?
I would think so. I mean, there's areas where it's going to be mowed off. There's been a lot of cattle grazed out, and so there's going to be some of that risk mitigated in that regard. But those that have snow on the ground, they're going to be thankful they do, I think. But wheat does have 9 lives. It'll most of it'll be all right, especially if they can bounce back pretty quickly as far as temperatures go. And generally in that part of the world, they do. It's not like Northwest Iowa where once it snows, you have snow the rest of the winter on the ground. It ebbs and flows down there, and you do get a reprieve. So hopefully, it's just not too long lasting, is all I can say. Because a lot of that wheat down in south central Kansas, and I know in northern Oklahoma, although I haven't laid eyes on it, was over a foot tall, and that's just kind of unheard of.
Okay, so we had a big rally in the soybean trade on Friday, but that's following a big hard down day on Thursday. What does that all mean?
Well, what I'm hearing, and I haven't had time to dig in and see what the details are, and the devil's always in the details, but what I'm hearing is that Trump actually had some constructive conversations with Xi Jinping. And so that's eased a little bit of the fear of what tariffs might do to the markets, because they did have some what was called productive conversations. So what those details are, I can't exactly say, but it did at least energize the market a little bit. But it's kind of interesting because you are supposed to have some significant rainfall coming through South America over the next several days, and we're going into a 3-day weekend. 3-day weekends have a tendency to turn the market, so you trade sharply higher on Friday right before a 3-day weekend. I'm just not liking it. I hope I'm wrong.
I'm glad you brought that up. Monday will be Martin Luther King Jr.'s holiday. It'll also be Inauguration Day. Man, there's going to be all kinds of things going on that day for sure. So with the ag markets being closed that day, I just want to double check with you. We're going to be reopening the overnight trade on Monday evening, right?
Correct. 7 o'clock Monday night for grains like normal, 5 p.m. for energies and whatnot. Now, the energies and interest vehicles will trade on Monday until noon. They'll have a shortened session, very low volume, but they will be open until noon on Monday.
So we talked about the wheat trade. We talked about the soybean trade bouncing back before the end of the week. What about this corn market? It just continues to forge ahead, doesn't it?
Yeah, interesting dynamic in the corn. I started, and again, this is something I mentioned on Wednesday. I started doing some bull spreading in the corn, old crop versus new crop, buying July, selling December, and feeling pretty fortunate that we got a lot of that done earlier in the week because that really made a move today. I mean, at times you had old crop up a dime when new crop was only up 3. That's a pretty nice move on the spread. And I think that's indicative of what the trade is expecting come March when we look at acreage intentions. You could have a number north of 95 million for the corn and just slaughter this market. Now, I'm not saying that's going to be the case, but if we do see a 95.5 or something along those lines, people talking maybe we see 96 million, that would just be hugely detrimental to the corn market.
Yeah, looking over at the December corn for 2025, I see where it's over $4.50, about 456 or so heading into the close. Is that a level where you are maybe comfortable with putting a floor in there for some of the new crop corn?
I think some people would be okay there, especially if you've got a little bit lower cost of production. I think the national average is going to be more like 460 to 465. Which is why we've gone to the March 26 contract, because most people don't sell in the harvest year anyway. They wait till after the first of the year. So we've been selling some March 26 futures. We only had one day where we could get a fill at 470, but we did that, then sold a $5 call above it and collected over 28 cents for that $5 call. So, if the market continues to rally, then you've got an effective hedge at $5. And if that's the worst you do all year, great.
Well, thanks for the update today, Eric. I appreciate that, and good luck on your investigative journey out in cattle country. Can't wait to hear back what you have to report next week. Hopefully you travel safe, and we'll talk again at that time, all right?
Yeah, be back, driving back to Iowa Sunday, be back in the office Tuesday.
All right, well, we look forward to comparing notes with you next week, Eric, after you make it back. Thanks for the update. Appreciate that. That's Eric Relph with Comstock Investments joining us here for a wrap of Friday's market action. That'll do it for this episode. For producer Breanne Jenkins, I'm Marlin Bohling. We'll catch you next time here on the Comstock channel. Futures trading involves risk. The risk of loss in trading futures and or options is substantial, and each investor and or trader must consider whether this is a suitable investment. Past performance is not indicative of future results.